This is our Forex blog for March 8th, 2011, and like what we do most days, we want to look and see which currencies are strong and buy those against the ones that are weak. The dollar had gone up yesterday and continued its strength today. The weekly trend shifted up. The monthly trend is still very weak. I'm experimenting with our Momentum Pro, adding it to our currency meter. I think it is a little bit too complicated to have to look at two different readings. So I'm probably going to incorporate this as an option in the IntelliTrend. You know, it will either lessen or strengthen bars and hopefully allow you to get a one glance strength weakness reading. But anyway, you can see the dollar with our old IntelliTrend tool and the new bar by bar analysis tool was showing quite a bit of strength last night. And basically you want to trade that against one of the weaker ones. The Swiss, the weekly trend of this was very strong. It shifted down today, but you can see last night a lot of weakness in the Swiss, and on a bar by bar basis a lot of really high momentum weakness bars. And sometimes these tools showcase the beginning of a new move a little bit earlier than the IntelliTrend. Notice, you know, some green here building 5, 10, 15 minutes before this started to show up here in the Swiss. So last night, you know, from 1 to 3, really high odds, high probability dollar Swiss. And you can see very early into that move when it broke above the 10-day moving average right here, and it really hadn't even completed more than a third of its up move, the new momentum bars showed you to really consider, you know, buying that. We'll add it to this chart too, because I haven't updated my class charts to have this. And this is on a bar by bar basis, how much momentum is going on, and it's for that time of the day. So as you can start, you can see the market was above the hourly. You had a big spike on this bar right here. It doesn't mean that this bar is gone up, but other dollar pairs are going up, other Swiss pairs are getting weaker. Took it about another hour before it finally broke above previous day's high. And you can see here on a bar by bar basis that, you know, dollar pairs are getting stronger across the board, and Swiss pairs are getting weaker. And it was one of the better and higher odds trades, and it just absolutely took off. I mean, you can see 3 times normal volatility. This is just exploding up. You know, those trends are very likely to continue, at least at the minimum, to the upper containment bands. You know, and this little bar right here, if you hadn't got into the trade earlier into it, you can see there really wasn't much of a pullback on any of the dollar pairs for this 5-minute bar, and Swiss pairs weren't getting stronger. So, you know, if you want usually a 2 or 3 5-minute bar pull sideways flag pattern is better. You buy that breakout right here and it just takes off. I probably would have looked to get out of the trade right here near the upper band, the weekly R1 pivot. But very high probability trades finding this. You know, and you might have even bought this pullback here because, you know, especially after it pulled back, there's a little bit of weakness here. Anytime volatility increases, you know, the pullback bars are going to show obviously a lot of momentum too. I wouldn't worry too much about it unless you see 2 or 3 intense red ones in a row. You know, as soon as you didn't have that here and it goes sideways a little bit, you can also consider buying this breakout right here. And you don't know it's going to take out the highs, but if it breaks out over the weekly R1 here and you see a spike here, it's pretty high probability it's going to go up. Now we're at the upper containment band. Usually that stalls and contains price, and it almost always contains price at the fib target above. So you draw your fibs on that first wave up, and if this continues on up to that level, you know, the fib level, you want to look to get out of your trade somewhere up here around 50. This is a 1.382 fib target, and the longer term trend on this thing is down, so I wouldn't expect too much of a explosive move up, but it is oversold on a daily chart. So you know, be careful if you're looking for any kind of counter trade up there. If you did look for a counter trend trade, watch this. If you don't see some big red spike bars, you know, get out of the trade with break even, small loss, or small profit. As you can see, it's kind of inching its way down, not with a whole lot of intensity, so you might want to exit that counter trend trade up there and make 10 or 12 pips on that short. But you really cleaned up. You probably would have missed this first spike, but you pretty much knew about it from 90 upwards, and it went up another 60 pips. Whether you took a trade here and made 20, bought this breakout here and made another 30, did a counter trend trade up here because it's really weak and the upwards momentum is kind of slowing. and usually it's safer to sell a double top. So when it comes back up here again, you can see quite a bit of strength. If you were trying to buy these pullbacks, you might have made a little bit or lost a little bit on that. Probably made a little bit on this. This pullback right here, you can see the weakness all but disappeared around 8:30, and when it started to go back up, you can get into the trend and hope it comes back up to the high. And at first, for the first 20 minutes of that trade, you're not sure, and then it takes off right here, and you can see with an intensity. So it's probably likely to go another 10 or 15 pips up. Again, a lot of intensity. It's only got another 10 pips to hit the 35.50, and again, you really want to watch it up here. It's up too much. It's double topped. Our trend intensity pro is showing a little bit less strength than before. And you're out of your trade up here around 40. But that's another 25, 30 pip move using this tool. Here's the euro dollar, and you can see it sold off yesterday, came back up to the hourly. Anytime a currency is underneath the hourly and it comes up to the hourly, it's usually a pretty good trade. And when the market, the euro dollar's trend is up, obviously weekly, monthly trend are up. But when it hits the hourly right here and can't get above it, and especially tries again to break out from underneath to above the hourly and it can't, you really have a pretty high probability trade once it starts going down. You don't know if it's going to take out these lows or the lows of yesterday, but as it starts to come down, you see this spike. So you take a shot at it. If you're wrong, you lose 5 or 10 or pips. A lot of times break evens. Once it moves 5, 10 pips your way, you move your stop in, so your loss is less if it doesn't continue. But at this point, you're very likely to break the previous day's low because it has 2 times more weakness than normal for this time of the day. And basically what this is telling you is other euro pairs are falling, dollar pairs are getting strong. It might have been at the same time the dollar Swiss was exploding up because of the strong dollar. And you can see it's coming down to the lower containment bands. It still has a lot of weakness. Right here it's kind of stalled. You might want to exit half your trade and see what happens on the next bar. A lot of times currencies that break the hourly by 10 or 15 pips will retest the hour, or not the hourly, the previous day's low. If it can't get above there, seeing that the upwards momentum isn't that much, you might want to just take a stab at it with a quick 5 or 6 pip loss if it breaks out. So you're short. You want to see as it comes down another spike down here, and at first you don't, and then it takes off. So it's very likely to go and break these lows because pretty much the euro pairs are falling and the dollar pairs are getting strong, and you want to draw your fib on that last wave. And because the euro dollar is such a strong longer term trend, the weekly monthly trend's up, you're not looking to get a 50 or 80 pip move here, but you might be short around 50 and you want to see how it handles the fib target down there. Notice some intensity on these down bars, and so I'd exit at the fib target down here around 22, mainly because of how strong it is on the weekly monthly trend, and you're near the lower containment band. But that's a great trade up here, short around 50, out of the trade at 22. It's a 30 pip move almost. It's beautiful, and not all these trades work like this, but on a bar by bar basis, if the momentum is in your way, or if you don't have any momentum, you might want to try to get out with a 2 pip profit if you're lucky enough to have one, or 5 or 6 pip loss. But that's the new FX Momentum Pro that we're giving our most active traders. If you're an active trader and you trade 10 or 20 lots per month, you can have access to this tool because it's an amazing scalping bar by bar analysis tool, and it works on all time frames from 1 minute, 15-minute bars, 5-minute bars, as you see here, 30-minute hourly bars, 4-hour bars. It's one of our best tools, if not the #1 tool we have.